we have, the Syndicate Bank management led by Mr. Melvin Rego, MD and CEO, and Mr. Mallikarjun Rao, Executive Director, and Mr. Krishnan S., Executive Director, and other senior management also on the call. I would like to request sir to give a brief presentation on the results, and thereafter we can start the Q&A session.
Okay, Rakesh, Mallikarjun Rao here. There was an urgent requirement to travel for our MD, so he is not available at this point of time. Myself, Mr. Krishnan, our CFO, our CRO, and other general managers are available in the conference call. So I will take 3 to 4 minutes for giving the brief of our performance for the Q1, and then we'll be open for the questions. Is that okay?
Yes, sir. Yes, sir.
Yeah, please. Global business of the Syndicate Bank remained flat year-on-year at 4,75,313 crore in June 2017 as against 4,74,976 crore in June 18. Global advances have increased year-on-year from 2,02,735 crore to 2,09,312 crore. That is an increase of 3%. On quarter-on-quarter basis, global advances has decreased from 2,23,346 crore to 2,09,312 crore, registering a decline of 6% on sequential basis. This was in large measure due to conscious efforts to shed corporate advances in view of capital constraints, as also due to strategy for rebalancing the portfolio with reduction in corporate advances and focus on RAM advances. The global deposits have decreased by 3% year-on-year from 2,72,578 crore in June 2017 to 2,65,664 crore in June 2018. The bank did not aggressively pursue deposits, keeping in sync the deposit growth as required for funding advances, rather than accepting deposits at higher rates and keeping the same in low-yielding investments. This would also have a bearing on M2M losses in the rising interest rate scenario. With respect to domestic business, it has grown by 1% year-on-year from 4,05,939 crore in June 17 to 4,10,870 crore in June 18. Domestic advances have increased from 1,63,000 crore 433 to 1,74,878 crore year-on-year. That is an increase of 7%. Domestic deposits has decreased by 3% year-on-year from 2,42,506 crore in June 17 to 2,36,002 crore in June 18. On quarter-on-quarter basis, domestic advances has decreased from 1,81,477 crore to 1,74,867 crore, registering a decline of 4%. The reason for the drop in advances and corresponding drop in deposits has been spelled out already. With respect to profitability, the net interest income has decreased year-on-year from 1,601 crore in Q1 FY17 to 1,506 crore in Q1 FY18. That is a decrease of 6%. The decrease in NII is mainly because of the interest reversal of 760 crore on account of higher NPA slippages, mainly from agriculture accounts where 630 crore as against an aggregate interest reversal of 260 crore earlier. Thus, net interest income has been impacted due to higher interest reversal of 500 crore. Other income has declined by 45% from 687 crore in Q1 17 to 380 crore in Q1 18. This is mainly because of drop in profit on sale of investments from 325 crore in Q1 of FY17 to 42 crore in Q1 of FY18. That is a drop of 87%, amounting to 283 crore. This is because of a significant increase in 10-year GSEC yields, which increased by 124 basis points from 6.66% in September 17 to 7.9% in June 18. In March 18, the 10-year GSEC yield was 7.4. That is an increase of 50 basis points in Q1 FY18-19. Operating expenses have remained relatively flat during June 18 quarter. There was a marginal increase from 1,308 crore in June 17 quarter to 1,328 crore in June 18 quarter in this respect. The operating expenses for quarter 18 June include provision of 60 crore for pending wage settlement, which was not there in June 17 quarter. Due to drop in net interest income by 6% and in other income by 45%, the total operating profit has dropped by 43%. The provisioning requirement increased significantly to 2,327 crore in June 2018 quarter from 1,243 crore in June 17 quarter. That is an increase of 1,084 crore. The reasons for this will be discussed subsequently while covering the asset quality. Overall, bank incurred a loss of 1,282 crore in June 18 quarter as compared to the net loss of 263 crore incurred in June 17 quarter. On a quarter-on-quarter basis, the net interest income decreased by 10% from 1,677 crore to 1,506 crore. This decrease was mainly due to interest reversals made during the quarter on account of the increase in NPAs, mainly in agriculture accounts, which will be discussed subsequently while covering asset quality. While other income decreased from 689 crore in March 18 quarter to 380 crore in June 18 quarter. Operating expenses decreased by 7% from 1,433 crore to 1,328 crore. However, provisions during June 18 quarter were 2,327 crore as compared to 3,938 crore in March 18. That is a decrease of 1,611 crore. As a result, the net loss incurred in June 18 quarter has come down by 42% to 1,282 crore sequentially from 2,195 crore in March 18. Cost of deposits, yield on advances and net interest margin. The cost of deposits has dropped from 5.75% in June 17 quarter to 5.39% in June 18 quarter. The yield on advances has dropped from 8.83% in June 17 to 7.79% in June 18. The domestic net interest margin has decreased from 2.85% in June 17 to 2.60% in June 18. The global NIM have also decreased from 2.46% in June 17 to 2.3% in June 18. The drop in NIM is mainly because of interest reversal of 760 crore, of which 630 crore is on account of higher slippage in agriculture accounts. This is in contrast to interest reversal of only 260 crore during June 17 quarter. With respect to CASA, the percentage has increased from 30.13% in June 17 to 33.43% in June 18. The bank is focusing on increasing CASA to 35% by March 19 through acquisition of salary accounts of our corporate clients, vigorously pursuing the accounts under trusts, associates, societies, and clubs, deepening our relationship with HNI customers, besides fresh customer acquisition through strengthening of alternate delivery channels. With respect to focus on retail credit, overall year-on-year basis, the RAM portfolio increased by 5%. On year-on-year basis, banks' retail advances have grown by 11%, agriculture by 2%, while MSME portfolio remained flat. Home loan growth during the year was 15%. On priority sector, the growth has been 5%, and we have achieved 43% of the ANBC as against the regulatory requirement of 40%. Similarly, in agriculture, we have achieved 19% of the ANBC as against the regulatory requirement of 18%. In all other subsegment of priority sector, we have exceeded the regulatory requirement. The percentage of retail advances and corporate advances to total advances as on June 30th, 2018 was stood at 54% and 46% respectively, marginally up from 53% of RAM portfolio achieved as on March 31, 2018. Our focus would be to increase RAM portfolio to 55% by March 2019 and moderate the corporate portfolio. With respect to asset quality, the gross slippages in June 18 was 3,945 crore as compared to 6,628 crore in March 2018 quarter. The total NPA slippages in agriculture sector was 1,831 crore, which constituted 51% of the total slippages of 3,945 crore in June 18 quarter. Out of the agriculture sector, 95% pertain to advances financed in Karnataka state. Further, a sum of 1,030 crore also slipped in high-value loan accounts of rupees 10 crore and above during the quarter. The upgradations, recoveries, and prudential write-offs during June 18 quarter aggregated to 3,342 crore as against 1,972 crore during March 2018 and 1,257 crore during June 2017. After taking into account the fresh slippages as also the cash recovery, upgradation and prudential write-offs, the gross NPA as on June 30, 2018 stood at 26,362 crore as against 25,759 crore as on March 31, 2018. The gross NPAs as on June 30 was 12.59% as against 11.53% as on March 31, 2018. Had the gross advances in June 18 remained the same as of March 2018, the gross NPA would have been about 79 basis points lower than the 12.59. However, the net NPAs in absolute terms as on June 30, 2018 decreased to 13,011 crore from 13,239 crores as on March 31, 2018. The net NPAs as on June 30, 2018 was 6.64% as against 6.28% as on March 2018. The reason here itself is also with respect to the decrease in the advances profile as at the end of June 2018. The PCR as on June 30, 2018 was 63.04% as against 54.8% in June 17 and 60.71% in March 18. The PCR in June 18 for 18 NCLT referred accounts having aggregate principal outstanding of 5,525 crore was 67% as against 64% in March 18. The total stressed assets, that is gross NPA plus standard restructured advances as per RBI definition of the bank has marginally increased from 12.39% in March 18 to 12.79% in June 18. The NPA provision and write-off for the June quarter 2018 is of 2,425 crore against 1,309 crore in June 17 quarter. This is mainly due to provision of 948 crore towards agriculture NPA accounts, additional provision of 324 crore towards NCLT referred accounts, and write-off of 685 crore towards one of the NCLT accounts which was settled in Q1. As mentioned at the time of release of March 2018 results, RBI has extended the spreading out of M2M losses on government securities over 4 quarters. The bank will be availing of this bank has availed of this benefit, and accordingly, the bank has provided 248 crore in June 2018 quarter. That is 407 crores so far, and further provision to be made is 586 crores in the remaining 3 quarters. It must be mentioned that yields on 10-year GSEC has dropped from 7.9% as on June 30th, 2018 to 7.75% as on today. It is further expected that these yields would remain range-bound till the next monetary policy in early October 18. Thus, there is every likelihood of lesser provisioning requirement on GSEC investments. With respect to capital, the bank continues to target conservation of capital for maintaining reasonable capital ratios. The CRAR of the bank as on 30th June 2018 stood at 11.84% with a CET1 ratio of 7.01% and a Tier 1 ratio of 9%. This is against the regulatory minimum core equity of 5.5%, CET1 including CCB of 7.375%. 8.875% for Tier 1 and 10.875% for CRAR ratio as on June 30, 2018. It must be mentioned that the risk-weighted assets to gross advances has reduced from 86.27% as at June 30, 2017 to 81.63% as at June 30, 2018. This broadly indicates an improvement in capital conservation efforts through building up better quality assets, as also increase in regulatory retail assets which have lower risk weights. Now I'll just summarize whatever I have put before you. The degrowth in advances was primarily due to the need to conserve capital and as also rebalance the advances in favor of RAM. The drop in advances by about 14,000 crore since March 18 has impacted the net interest income. Further, the reversal of interest of 760 crore, as detailed above, has resulted in drop in NII as also NIM. CASA percentage has increased and is trending towards the year-end target of 35%. Operating expenses have remained flat since June last year, notwithstanding the additional provision being made for the pending wage negotiation. As regards provisioning, the bank has taken the entire impact of the restructured agriculture advances, and provisioning is likely to reduce in the next 2-3 quarters. The bank's recovery efforts have resulted in cash recovery of 1,410 crore, 25% of the annual target of 5,600 crore in June 2018, compared to 378 crore in June 2017 and 741 crore in March 2018. The PCR as on June 30, 2018 stood at 63.04% as against 54.8% in June 17. In spite of degrowth in advances, the core equity and then capital conservation buffer stood at 7.01% as against the regulatory norm CET1 of 7.375%, which will increase to 8% on March 31, 2019. With the bank's strategy to focus on high-rated corporate advances and regulatory retail assets, which are capital light, coupled with focus on augmentation of CASA and steps taken for NPA management, Team Syndicate Bank is confident of an improved financial position and profitability in the coming quarters. This will conclude my brief presentation. Now our team is open for the questions from the members. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Kiran from L&T Mutual Fund. Please go ahead.
So thank you very much for taking our question. So our question is on the capital front, sir. So,
yes.
Of course, the CET1 as of now is 7.01.
Correct.
Which has fallen below the regulatory requirement of 7.375%, which is as of now, and possibly it will increase to 8% by March 19.
Correct.
So, sir, my question is that since it has fallen below the regulatory requirement, so are there any restrictions that would come from the regulatory side, either in terms of business going forward, that you may not be able to increase the business going forward, or even in terms of distribution, either in the form of a dividend or even in the form of the coupons on the Tier 1, Tier 2 instruments of Basel 2 and Basel 3. So are there any restrictions which are imposed given the fact that it has fallen below the regulatory requirement?
No, there are no restrictions. The results are declared today only. It is only during the Q1 we believe that the capital assessment is done at the end of the financial year. However, while I cannot predict anything from the Reserve Bank of India side, we are very confident that there would not be any restrictions. And even if you look at our business proposition in the last, from March or even the last 2-3 quarters, we've been concentrating in rebalancing our advances profile, moving towards the RAM segment. Though the growth has been slow in that, we are moving in that direction. So the reduction in advances in June was a conscious measure, and we have already planned for augmenting the capital to the extent of 5,000 crores during the year, and we have already taken the required approvals through the AGM. We'll be doing that exercise whereby we would be confident to achieve the 8% by March 2019.
Okay, sir. And so on the plans of 5,000 crores of capital infusion, how much is the proportion that will be coming from the government, and whether the government has already committed on that part?
No, government has not committed as on today. You must be aware that in the month of March, government has given capital to all the banks, and afterwards in Q1, they have given capital only to 4 or 5 banks. With respect to other banks, there was only a faint message or news in the papers indicating that government may be reassessing in the Q2. Now, we will be engaging with the government with respect to our requirement. Our overall requirement is 5,000 crores. We are not bifurcated. First discussion will be with the government soliciting for the capital, and afterwards we will be taking the action with respect to capital infusion through other modes.
Okay, sir. But, sir, are we very much confident that by March 19 we'll be able to achieve CET1 of 8%?
We are confident because 5,000 crores is the requirement for capital. We are confident of getting some capital definitely in a substantial amount from the Government of India, and we will also look to go for the market.
Okay. So at least till March 19 we don't have any restrictions on any business front or even on the payment front.
No, as on today we don't have any restrictions. We are going as per our plan.
Okay, sir. Thank you very much, sir.
Welcome.
Thank you. The next question is on the line of Jay Mundra from B&K Securities. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, if you can, last time when we had this call, you had an expectation of 7,500 crores of slippages for full year.
Correct.
Of which, 2,000 crores could be coming from corporate.
Correct.
So, sir, what is your sense now, sir, for the next 9 months?
We have to see the first thing in my brief indication I have given that 1,800 crore slippage has come from agriculture.
Correct.
And this, if you look at the restructured profile as at the end of March 2018, you would have seen a figure of around 1,200, 1,300 crores, which majorly comprises agriculture. What we have done in Q1 is, we did not want to keep any restructured profile of agriculture mainly in the state of Karnataka, and we have identified them as NPA. After identifying as well, we have taken the provision to a greater extent, the reason being from the taking the date from the first date of restructuring, because in the state of Karnataka, drought was there consecutively for 3 years. So, the NPA slippage in agriculture, besides the restructured profile, there was also a little extent of around 600 to 800 crores. So considering that our large corporate profile, what guidance we had given last time is 2,000 crores will continue to remain the same. Our total was 7,500, but overall 7,500 in the next 3 quarters, considering the slippage, what has happened in Q1, we are correcting it to 9,600 crores slippage. So overall our closing NPA should be 25,000 crores. As on today, as at the end of June, closing NPA is 26,361 crore, which we are confident in the next 9 months to bring it down to 25,000 crores. This is also where there are few accounts in which case RBI during their AFI is discussing with us, and in those accounts as well, if there is any likely slippage, that also we have reckoned while we are recalculating the position of slippage from 7,500 to 9,600, including the agriculture. However, we would like to control the global overall NPA outstanding to 25,000 crores.
Sure. So,
by March 19.
Yeah, so even after, based on your preliminary discussions during this RBS audit,
correct.
This 9,600 crores would include everything that you sort of would,
That's correct. That's correct. Okay. That's correct.
Sure, that is one question. And secondly, sir, if you can tell us what is your SMA 1 and SMA 2 book, if you have that number handy.
Yeah, just a minute. SMA 1 and 2 are around 6,797 crores.
6,977.
797. 6,797.
Okay. And, roughly between the SMA 1 and SMA 2, sir, individually?
SMA 1 is 1,767.
Okay. And rest 5,000 is 5,300.
SMA 2.
200. Okay.
Yeah, generally in June, you get the SMA 2 more, but over a period of next few quarters, it gets reduced.
Correct. And just a last thing from my side, there was a bill, report which was tabled in Parliament for June for electricity sector, power sector.
Correct.
which had, details of 64 gigabytes of stressed power plant, IPP. So what would be our exposure to these, either NPA or stressed power, private power loans, sir?
See, our total exposure in the power sector is 12,846 crores.
Okay.
Against which government sector is 7,761.
Okay.
And under Samadhan, the accounts covered are 2, amounting to 383 crores.
Okay.
So we don't expect much of a problem here because the government and RBI are engaged in this. We wait for the outcome of the same.
Okay. And these 2 accounts under Samadhan, they are already NPA, right?
1 minute. That is 383 crores. Both are NPA.
Both are NPA.
Correct.
Correct. So, so the question is there any stressed power account wherein, discussion is going on between RBI and Finance Ministry, wherein the account is stressed but not NPA?
No. The individual account, they are not discussing. They are only looking at the overall power sector policy, which government is engaging with RBI. Because of the February circular.
They have given, 34 names which are stressed. And then they have also added some 10, 20 accounts more into that list.
Mm-hmm.
So
in that list, if you want to compare, we have only 2 accounts.
Okay.
What I have said, these 2 accounts have become NPA.
Sure, sir. And what is the total power? So 4,000 roughly is our 4,500 crores is roughly private power exposure. How much is NPA, sir? We used to have that in our presentation, but I believe
it's correct. Around. It is there, no? Where is it? 1,075 is the NPA.
1,075.
Correct. It is given on slide.
Yeah, but that has not reached, sir, I believe. Presentation is...
Okay. Slide number 10 it is given. No problem.
Sure, sir. Okay. Thank you so much, sir.
Thank you.
Thank you. We have the next question from the line of Anand Dada from HDFC Mutual Fund. Please go ahead.
Hello, sir. Sir, last time we were below, we have increased our slippages guidance from 7,500 to 9,000 crore rupee, 9,600 crore rupee. So is there any change in our provision cost guidance also? Last time we were...
Provision, last time we had indicated 4,500 crores. Hello?
Yeah, sir.
Last time what we indicated was 4,500 crores in terms of the provisioning, which we have now recalculated to 5,000 crores.
Okay. So this 5,000 crore full year provisioning now, of the same 2,500 crore has been provided in Q1 itself.
Correct.
So it seems then for the full year, sir, we won't be able to make profit this year, sir.
We will be break-even. Last time we have indicated we will stick to that. We will be break-even, we will not have loss.
But sir, today in Q1 we have 1,200 crore of loss. Which
correct.
In the next 3 quarters we should be doing a 1,200 crore of profit.
See, 1,200 crores of loss contains one-time interest reversal and provisioning amounting to 980 crores related to agriculture.
You said 760 crore in the initial remarks, sir.
So interest reversal, then provisioning, both together.
Okay.
And this is done consciously because already government has declared for the debt waiver, as a result of which the amount is expected to be settled during the Q2. And there may be an advantage for right back.
Okay. Sir, this quarter, sir, for us also there will be one last year account which got settled in NCLT.
Correct.
So it could have considered. So what could be the interest income we could have earned on that account, sir? Additional interest income?
300 crores.
Okay. So the NII fall includes the 300 crore of additional income. And then
correct, and the reversal of 760 crores.
Okay. So if this 300 crore has not been come, the NII would have been 1,200 crore rupee.
Yeah, correct. You are absolutely right.
Okay. Sir, if I have to look at our of the gross NPA, sir, what is our corporate NPA, sir?
Gross NPA?
1,000. Slippage is 1,000.
Slippages you are talking about?
No, No, sir. Of the outstanding gross NPA of 25,000 crore rupee, how much corporate NPA in that, sir?
26,361 is the total gross NPA.
Right.
Yeah, out of the gross one, I can tell you. 14,625 crore.
Okay. And sir, of this 14,000 crore rupee corporate NPA, how much has been referred to NCLT?
NCLT 5,500. Now outstanding is 5,500. If you remember last time
NCLT, the cases in tranche 1, tranche 2, what we have referred is 6,900 crores originally. Now after settlement of the accounts, 2 accounts, it is 5,537 crores, wherein we hold 67% of the provisioning.
Okay. So of the 14,000 crore rupee corporate NPA, 5,500 is referred to NCLT.
Correct.
On the balance, sir, if you can guide us what is happening on the balance, where we are in terms of resolution, why are we not referring all the cases to NCLT?
Also we have referred to NCLT.
How many cases we have referred to?
Tranche 1, tranche 2 as per the RBI. Other than that, we have referred 34 accounts amounting to 3,179 crores, 175 crores.
That's around 60% we are holding.
Here also we are holding 60% provision.
Okay, so effectively we have 8,600 crore of NCLT cases resolved.
Correct. Yeah, that is 8,700 crores of NCLT, and the provision will be almost 72-73% if you take both together. No, not 72, 65%.
Okay. And sir, fine, sir. That's from my side, sir. If there's anything, I'll get back to you, sir.
Right.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Dinesh Gupta from Dalmia Securities. Please go ahead.
Hello. Good afternoon, sir.
Yeah, good afternoon.
Sir, I have three questions. First one is that in your disclosure, you have mentioned about 100 crore has been taken for the provisioning based on legal advice. So I want to understand what is for that and whether it is as per the RBI norms.
No, in one of the accounts, NCLT has given in favor of us. However, the report has been referred to NCLT.
Okay.
So, pending the decision, whatever the cash funds have come against that, which in line with the expert opinion, we have reversed the provision.
Okay, that's fine. And the other question is regarding the restructuring loan. Just want to understand about the restructured agri loan, whether they have been classified, which has been classified as an NPA, are still pending, some amount has been pending.
Now if you see the restructured profile, it has come down drastically.
Now only we have 425 crores.
425 crores is the restructured profile now.
430?
425.
435, okay. So, what percentage would be that, this agriculture loan?
Agriculture, we have taken everything. Agriculture is zero now.
It is zero now.
Yes.
And one more thing, recently that Karnataka government has announced for agriculture debt waiver. So, whether that will have any impact further, on NPA?
That will have a positive impact on the country.
That will have positive.
Because whatever 1,800 crore I have indicated, that we have made NPA during Q1 in agriculture, 95% belongs to the state of Karnataka, where we have reversed the interest almost for 2-3 years, taking the first date of restructuring, and also provided more than 60%. As a result, there will not be any impact negatively on the country. The impact could be 80%. Total provision is now 80% in those accounts.
Okay.
So as a result, it will be positive impact for us during Q2.
So that will have positive for your bottom line, right?
Correct.
If I understand properly. Okay. And one more question is that regarding this, right now the RBI has increased the interest rate. So what impact will have on your net interest margin, going forward? What will be the impact on your...
Immediately. It may be, if you look at the lag effect, it may take another 1 quarter. Okay. That is why we have not even changed our MCLR at this point of time. So we will wait and see and take a call probably after the next RBI declaration comes.
Okay, so you don't think that the NPA will increase because of this or
No, very, very marginal at this point of time.
Marginal?
Very marginal.
Okay.
We'll have to wait and see for a couple of months.
Okay. Thank you for that, sir. Like, I have this question only. Thank you.
Thank you. The next question is on the line of Sneha Ganatra from Shubham Ventures. Please go ahead.
Wanted to know on the growth part for the full year, because we are having a capital constraints also despite of raising 5,000 crores. So how do you see your growth would be achieving it?
No, if you have seen the position of risk-weighted assets, in our brief, I have already indicated that we brought it down from 87% to almost 81%. So we have been consciously trading in terms of the large corporate to provide the credit only for high-rated companies. Thereby, risk weight is coming down. Our projected figure for advances for March 19 is 2,33,000 crores, which we indicated last time when we spoke to you. The guidance will remain. There won't be any change on that. Okay. Because we have already projected for capital infusion of 5,000 crores, which we are confident of mopping the same during the current financial year.
My next question is on the recovery front. How much recoveries are we expecting from the NCLT resolution also, and of the normal recoveries also, when you're mentioning of the 25,000 crore cross NPAs to be, and where is your PCR target you would like to achieve it?
Okay. So with respect to NCLT, there are at least 5 accounts which are in the pipeline, which we are expecting to fructify during Q2. Now, considering them, the overall recovery, what we are looking at during the current year, would be around 4,800 crores. And 1,750-800 crores roughly will be the upgradation. Okay. Considering all these factors, we are expecting the closing figure of gross NPA at 25,000 crores.
Okay, got it. Yeah. And on this investment book, we have to amortize for the next 3 quarters. What would be the amount on that front?
It is around 560 crores in the next 3 quarters. But this is the figure as on today, but we are confident the figure may come down because of the movement of the GSEC prices expected to go down.
Okay. And on the credit cost you mentioned around 5,000 crore, right?
Yeah, the provisioning is 5,000 crores, so percentage is 2.25.
Okay. And the OPEX would remain at the similar level what we have seen in the Q1?
Yeah, it will remain at the same level. In fact, if you compare it also, even though our cost-to-income ratio has increased, it was purely because of the reduction in the income. Our expenditure will remain same.
Got it. Okay. Thank you. All the best.
Thank you. We have the next question from the line of Anand Daga from HDFC Mutual Fund. Please go ahead.
Hello.
Hello.
Sir, are we looking to sell any of the non-core asset to raise capital, or do we have any non-core asset?
No. We don't have any non-core assets. Only investment is there where probably in Q2 we'll try to do that.
What sort of investment and how much one can expect, sir?
It will happen, we are expecting it to happen before Q2. And we may get around 100 to 120 crores benefit.
Okay. But are we also looking to sell some of our real estate, sir?
We don't. We are not looking at.
We are not looking. Okay. So this quarter, our recovery from return of assets was quite low. Anything to read into that, sir?
No, we'll be gearing up in the next 3 quarters. There were efforts for recovery. The return of account, if you look at, it is around 66 crores during the quarter.
Right.
And in, as against 58 crores last year, June 17. Whereas in March, if you look at it, was 181 crores.
Right.
We are expecting it to get more recovery in the next 3 months. Efforts are on. We have taken conscious efforts in even for auction and other related activities with respect to various NPA accounts.
So last year we did almost like 400 odd crore rupee recovery from return of assets. Can we expect similar amount or higher amount from that, sir? Similar number?
It will be more than that.
So how much is our internal we are targeting, sir, this year?
It could be around 500 crores.
Okay, sir.
Madam, if you see last year also, it normally happens in the second, third and fourth quarter.
Third and fourth quarters. The actually pickup comes in third and fourth.
Oh, okay.
Thank you.
Thank you, sir.
Yeah, thank you. The next question is on the line of Jai Mundra from BNK Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity again.
Yes.
Sir, first on your overseas book, how much more rundown can happen from, first quarter levels?
Rundown means?
I mean, this portfolio has been shrinking because of obvious LOU.
If you look at our London portfolio, 70 to 75% is a interbank portfolio.
Correct.
And the interbank portfolio is in a short-term duration nature. So it is always in our hands to look at whether to increase or decrease. There are two elements to it when we look at. Average risk-weighted assets comes to around 35%, and also the NIM is very low. So as a result, considering the requirement while assessing our advances profile, we take a call. If you look at the March position, we were at 42,000 crores. And in June, that is advances figure I am talking about. And in June, it has come down to 34,444. So overall, we are projecting the figure to be at 40,000 crores by March 2019.
Okay. Okay. Sir, secondly, on SME dispensation of 180 days DPD, what is the quantum that we have taken under this dispensation?
It is not a very high amount. I'll tell you just.
Then we have told in our...
No, I believe that the quantum is not mentioned in that release.
Okay, no issue.
Okay. 930 crores.
930 crores overall.
Sure. And sir, this on Bhushan Steel, this 300 crores income that has gone to NII,
correct.
Was there any corresponding increase in slippages pertaining to this entry?
No, there is no slippage, but then in provision, write-off will always be there.
Okay, the write-off will on the higher side because of that.
Okay.
See, what happens is the kind of settlement, how it has happened, and the component, whatever amount is received, the component of principal as well as the interest. So that bifurcation has given the 300 crore as an interest income. However, while writing off the entire outstanding, the residual balance was shown under written off.
Okay, because some of, one of the other bank, this 300 crores, they have also increased the loan book. So this 300 crores, when loan book increase, then it also goes to the slippages.
The loan book increase point comes into picture only when you are not closed the outstanding. Now, for us, the outstanding is zero.
Okay. And so just lastly there was media reports on this AQR, second round of AQR wherein RBI auditors are going and checking or at least asking banks to provide at least provide more or maybe they have started this RBS audit pretty early this time.
Yes.
One fear was on, they have identified some accounts wherein banks may have to provide more. And secondly, there was a list of this forensic audit wherein, are we asking to step up the provisioning?
See, these are all media reports, but one thing is, yes, RBS is in progress in many of the banks by RBI, so also our bank. There were few discussions related to some of the accounts. So what we have done is, based on the discussions on those accounts, we have already reckoned in our readjusted slippage figure of 9,600 crores. Earlier, when we had spoken to you, we gave a figure of 7,500 crores. So there were two elements of those which we did not reckon at that time. One is agriculture, which we wanted to take it completely. Second one is this kind of, RBS. So together in reckoning, we readjusted the figure to 9,600 crores.
Sure. And could there be any corresponding increase in provisioning as such? Because, some of these accounts, when you start, recognize them as an NPA.
That is why we have adjusted the NPA provisioning figure also from 4,500 to 5,000 crores.
Sure, sir. And just last question from my side. Sir, after this 12th Feb circular, advances about 2,000 crores at system level.
Correct.
Those who were in day zero default category. Just wanted to understand from qualitatively perspective, have you seen any successful resolution so far, or would all of them would come together towards the deadline? So is there any few cases?
Is one which is related to those accounts which are already in default category. Not NPA but default, above 2,000 crores. However, if you look at the traction of those accounts where units are doing well, but earlier they used to pay before 90 days, there is a little difference across the banking industry, where now they started paying in time, when there is a cash flow in their units. Now with respect to the accounts, where there is a default and a resolution to be referred, time is there, you are all aware, during this month, and we don't have many accounts to be referred to that, and they are all in consortium category.
Yeah, no, not from your bank perspective, sir, but is there any resolution which is being accepted for all banks? Because the condition is that all banks should have accepted the resolution and account should become standard to all banks.
Correct.
So, has there been any successful such cases where, the company was in day 10 default, let's say, 10, 15 default, and it has become standard?
So far, no.
Sure, sir. Thank you so much, sir.
Thank you.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Chintan Shah from Elara Capital. Please go ahead.
Hello.
Yes, sir. I had just one question related to the provision coverage. So we have been continuously increasing our provision coverage from around 54 a year back to 63%. So any targets in mind by March 19 for the...
We should be around 65%.
Okay, so not beyond that, no? So that it will stabilize around 65%.
See, it is all based on 2-3 calculations. One is what is the aging provision required. Second is what are the fresh slippages we are looking at. And the third one is the any RBI indication to, in case of existing accounts, to make the additional provision. So all the 3 reckonings we have done, and accordingly our expectation is around 65%.
Okay. Sure. Okay, sir. Okay, thank you.
Thank you. We have the next question from the line of Rakesh Kumar from Elara Securities. Please go ahead, sir.
So just some questions from our side. So firstly, sir, on this private-owned power exposure of 5,000 crore, so 1,100 crore is already NPA. So how much more is expected in coming time?
In the private-owned 5,000 crores, the existing NPA is around 1,100. Power sector, how much is it?
1056.
1,075 crores. 1,075 is 1,100. So any other accounts which are under stress? Rakesh, we don't have any other accounts which are under stress.
Okay, so all are running condition?
Yeah, correct.
All are running.
Okay.
And then covered.
Okay. And secondly, sir, this positive impact, what we discussed on this agri loan waiver. So when can we realize or this in which quarter possibly?
It could be in Q2 or Q3 because there is an indication from the government that while they are looking at everything, it may take place in the month of September end or October.
Okay. And how, when the restructuring of these agricultural loans were done, how old, what is the...
In the state of Karnataka, drought was there for consecutively 3 years ending 2017. That means 14, 15, 15, 16 and 16, 17. So the accounts were restructured 2 to 3 times because of the drought as per the declaration by Government of India and under the RBI guidelines. However, the monsoon in the current year has been good. Since the government, it is a sensitive matter politically, since the new government has declared that they will be coming out with the scheme of debt waiver, people have not paid the money. So we did not want to wait and then we have taken an entire profile under NPA.
Okay. And the provision cover on that is around 60%?
80%.
80%, okay.
Yeah, correct. Because we have taken the date to 3 years back.
Okay, correct.
Failure of first restructuring.
Okay, understood.
Yes.
Okay, I'm done. Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Right, thank you very much. If there are any other questions.